to the very first episode of Traders Playbook, the podcast where we unpack the real stuff behind trading. The habits, the mistakes, the breakthroughs, and the mindset that makes a difference. I'm Azita, part of the marketing team at Deriv. With me is Priyanka, also from marketing, and today we're joined by someone who's no stranger to market pressure. Prakash Bhudia, head of product and growth here at Deriv.
Translation, if we say something ridiculous, he'll call us out.
I'll try to behave, but if I hear emotional trading dressed up as strategy, I can't promise anything.
Fair enough. Today we're digging into Introduction to Trading Psychology by Baehr and Aziz, a book that reminds us of something brutally simple. You're not just trading against the market, you're trading against yourself. So let's ask the big one. Can you actually train your trading mind? Or is that just another nice-sounding myth? Let's break this down. Baehr and Aziz argue that mastering emotional control and building self-awareness isn't a side skill. It's the foundation. You can have the best technical strategy in the world, but if you crumble under pressure, you'll still lose.
Yeah. Everyone says that. Be calm, be smart. Try saying that when your trade is tanking.
Exactly. Saying it is easy. Actually, training it is the work.
And most traders don't realize just how fast emotion takes over. We've all seen it. Someone goes from methodical to manic in one bad session. That's the part Baehr gets right. He's not just preaching calm, he's teaching how to build it.
And this isn't about becoming emotionless. It's about being prepared before the market tests you. There's a part of the book that really stuck with me, the idea of mental capital. We always focus on protecting our money,
But no one talks about protecting your brain cells. Seriously. You chase a bad trade for an hour, you are fried.
Exactly. Every emotional spike drains you, and you make bad decisions even if your system is good.
And then the revenge trading starts. Mental fatigue leads to bad setups, overconfidence, hesitation, all the emotional landmines. This is where journaling and pre-market prep actually matter. Not because they look good, but because they conserve that capital.
Baehr also mentions self-talk, the internal voice that either builds your discipline or breaks it. Imagine a trader who says things like, "I'll just take one more trade, it's fine." They need to become aware of the danger of this type of self-talk.
One more trade? What could go wrong? Yeah, that voice needs to be muted.
Or retrained. Good traders don't eliminate emotion. They learn to manage their response to it. That starts with noticing the voice, not blindly following it.
And one tool for that is the pre-mortem. Before you take a trade, ask yourself, if this goes wrong, what will I do?
It's uncomfortable, but useful. It forces you to think about risk, not just reward.
By the way, one thing that we talked about in passing, and something we'll dive much deeper into in our next episode, is the idea of trading journals. Not just recording wins and losses, but journaling emotions, mindsets, and decision-making under pressure. Your journal can become a mirror that shows you patterns you'd never spot in the moment. So stay tuned. We'll have a full episode just on how to actually build and use a trading journal, and why it's way more powerful than people realize. All right, let's make this practical. If you're a trader today, maybe on Deriv, maybe anywhere, how would you actually apply these lessons?
First, you adapt your strategy to the conditions. When volatility spikes, like we're seeing with Bitcoin, tech stocks, etc., you need to choose tools that match your mental and financial capital. On Deriv, you have choices. If you want direct exposure, you can trade CFDs. If you prefer defined risk, you can trade options. If you want volatility without real-world news shocks, you have derived indices.
And don't just hope you'll stay disciplined. Force it into your setup. Set daily loss limits. Have clear emotional exit rules. Maybe even journal before you trade.
So the mindset shift isn't sit out and wait forever. It's recognize when your mental capital is low. Adapt your strategy to match the real conditions you're facing. Stay flexible and trade with intention, not impulse. Trading psychology isn't about becoming emotionless. It's about becoming the version of yourself that can think clearly, even when the market isn't clear. Introduction to Trading Psychology reminds us, you don't have to eliminate emotions. You just have to stop them from running the show.
Or at least making slightly fewer tragic decisions. Progress, right?
And recognizing patterns, not just on charts, but in yourself. That's where long-term consistency actually starts.
Thanks for joining us for episode 1 of Traders Playbook. We hope today's conversation helped you see trading in a new light, or gave you something practical to try on your next Deriv session. Drop a comment and tell us the worst trading mistake you ever made, or tell us how your mental strength saved you from making such a mistake. Share this episode with a trading friend who could use these tips. Catch you next time.